Hello, I'm Asif Farouk of Finextra, and we're here at Cybos 2014 in Boston, and today I'm with Angus Fletcher of Deutsche Bank. So Angus, thank you for joining me.
Thank you.
How will this current wave of regulatory changes impact the universal banking model that Deutsche Bank's been advocating recently?
We recognise with the new legislation that's coming through that there is a drive to make banks safer, which we wholly support and think is absolutely the right way to go. The difficulty is with the geographical reach that we have and the many different services that we have, the new raft of legislation that's being brought in across the various jurisdictions certainly makes this a challenging environment for us at this point in time, and that's partly from a timing aspect, it's partly from an interpretation and an implementation aspect as to how different regulators are interpreting and bringing that objective to bear. We spend a huge amount of effort, and that both within my team and across our organisation, in really working with the industry and with legislators to make sure that we really understand those requirements and adapt and change our business models in order to be able to meet those requirements.
Okay, Angus, so you spoke about bank safety, and obviously that's central to regulation that's coming in. But how much of that is just about leverage ratio?
The leverage ratio is just simply one part of the bank safety program, and it really forms a part of the Basel III set of legislation, which is all about how much capital a bank has to put aside, and all about the risk profile and risk measuring that a bank has to implement. There are two other key pillars in the bank safety space that are also of enormous importance. One is ring fencing activities. We've seen through the Volcker program in the US the prohibition of certain activities. We're then seeing in Europe, both at national level through such as the German separation law, and also at European level, the EU Liikanen proposal, which is still to be finalised, a real focus on determining what activities should remain in a trading entity versus those that should be in a deposit entity in order to separate the potential risks. The final area of focus is around living wills and recovery and resolution. And again, on both sides of the Atlantic, we're seeing a huge amount of activity there to really determine for banks in the event of a default how those banks can be wound up in a manner that ensures that they don't create extra risk to the system. Each of these three pillars are of enormous importance to us within Deutsche Bank and within global transaction banking, both to understand really what the impacts are from a transparency and reporting aspect to regulators, but also around what does that do to our business models, and how does that impact our customers, and how do we ensure we keep them informed of the change as it comes through from the regulators, and the timings around implementation that are critical to us and to them in that event.
Okay. And lastly, infrastructures such as trading venues, clearing houses, CSDs, these are all poised to play an important role, I suppose, in the future of the landscape. But how do you see this developing?
So clearly, regulators have decided that market infrastrucures are the right place for more post-trade and execution business to be done. There is a very good rationale behind that, both in terms of from a transparency point of view, but also from a standardized risk mitigation perspective. We've seen in the past as well, there is also, prior to the crisis, if you look at T2S, it is also a driver for achieving greater efficiency in markets as well. What we do need to look for as we move forward is what are the new risks that this will potentially create. There are, as we put more business into infrastructures, then we need to look at are they able to deal with all of that new business, and certainly what the next package of legislation we're expecting to come through, and the FSB has already worked, Financial Stability Board has already worked in part on this, but we're expecting to see more come through both in Europe and US associated with recovery and resolution for market infrastructures as well. And this is going to be very important for us as participants into those as to what our obligations will end up being in those particular infrastructures.
Okay, thank you.
Thank you.